Okay, pardon me. It's a target of close to 1594. Sorry on that one, with a stop loss at 1567. That is the management of Cholamandalam Investment, Mr. Arul Selvan, who is the CFO, joining in to talk about the pretty stellar quarter. Healthy profit growth, NIIs was strong, and operating profits too came in pretty robust. Thank you so much for taking time out and joining in, Mr. Selvan. Just run us through what led to this stellar quarter this time around, and what has been the key contributors to growth.
See, this quarter we had a good set of numbers coming out of better interest income coming in due to lower income reversals, and our disbursement growth had been fairly stable. We had a good numbers coming in from home equity, which grew by 16%, and the vehicle finance also had a growth of around 2%. Put together, there was an asset growth resulting in better income coming in. Income reversals were lower, though expenses seems to be slightly higher. It had a one-time expense of VAT provision, which was for 21 crores, but for this, the regular operating expenses had been fairly stable, and we had been able to push it down, if I don't consider this, to around 3.3% of the assets. This had contributed to the better profits for this current quarter.
Okay. Going forward, in what range do you see your margins shaping up?
Yes, margins will be better because we have also been making better savings on the cost of funds by progressively shifting from bank borrowings to market borrowings. We will see a good number of numbers coming out of this shift. So we expect cost of funds to be progressively lowering over the next two to three quarters, with some help from the repo rates coming down. That would also benefit us, especially if the bank base rates are brought down. That would benefit us more. Also, we are on the sorry, go ahead.
No, sure. Make your point, please.
No, we are also doing some improvements on the productivity sides by bringing in better technology, so that would also help us reduce expenses ratios.
Okay, what about your gross and net NPAs? How have they shaped up this quarter versus the last?
Compared to Q4, it had been a marginal increase. It had moved up a bit, but in any year, if the first quarter, there will always be an increase as compared to the Q4 of the previous year. If you look at a trending perspective, this increase had been much lower than what it used to be. So that way we are happy, and our focus remains on collection, and we have been pushing down on the collection costs as well as on the NPA numbers. So this will continue for the next 1 or 2 quarters until we are fairly stable on the gross NPAs.
Okay, and take us through some more details in terms of what is your AUM this time around, and do you think that the pickup in the MHCV sector is sustainable? Are you seeing the cycle picking up and thereby aiding your overall AUM growth?
Yeah, our AUM has grown. We are at around 26,000 crores on the AUM side, and this has grown by around 10 to 12% this quarter. And our focus has been more on the lights and mini lights, we have also been able to make progress on improving our portfolio on the HCVs as well as on the used segment. So the HCV, while the yields are slightly lower than our normal yields, the used segment growth had helped us to maintain the yields at the fairly stable level as per our earlier quarters. And so this mix has contributed to maintain our yields as well as the NIM.
And can you just run us through what exactly the growth strategy is for FY16 to 17? Are you sufficient when it comes to your capital needs?
Yeah, we are fairly stable out there. We are around 20% plus on our capital adequacy, with a lot of headroom to do on the Tier 2 further if we need to. I think for the next 2 years, we are fairly stable. We are fairly comfortable on our capital adequacy, even with the new norms of the RBI, which requires 10% on the Tier 1. So we are fairly stable out there. So our growth will be focused on growing the lights and mini lights once the market opens up. And we will, in the meanwhile, be leveraging our strengths on the used segment.
Okay. Do you recognize NPAs at 150 days past due now? View on asset quality as well going forward?
Yes, we have started doing this effective March 15, when 1 year ahead of RBI requirements, and this quarter we have continued to do so, and we will be looking at going to continue to do it and see how best we could keep ahead of the curve on this.
Okay, we'll let you go on that note then. Thanks so much, Mr. Selvan, for joining in, giving us a glimpse as to how things are going to shape up for Cholamandalam going forward. Okay, and that's the word coming in, talking about how they are going to see AUMs at about 26,000 crores in the next few months, and the home equity grew by about 16%. Margins also will do better going forward, and gross NPAs have seen a little bit pressure, but when it comes to capital adequacy, the company is currently well funded. 689 down by 0.2% for that stock. But the markets are on a tear, and with that we wrap it up right here on the Stock Game. Up next is Market Sense.